Innergex, INE on the Toronto Stock Exchange. Okay, good solid utility here in renewables. So solid, but also exciting in the renewables area. Also, if you're into the ESG investing, which stands for environmental, social, and governance, and it's a big area now. People in the business are really getting on board with this. If you're just a individual investor and you're taking a look at our video, you might not know what ESG is, but it's going to get bigger and bigger. So environmental, social, and governance, and it's all about responsible, sustainable investing. First of all, it actually just makes sense. It actually, sustainability, and in the long run, that's what you want. And then it's about being a good corporate citizen as well. So, are you doing good for the environment? Are you doing good for social justice? And do you have good governance? Okay, so this I think would be a candidate. Now, I also want to say I'm not an expert in ESG. However, I have a pretty good BS meter, and you can tell some companies they put it on their website and it does lip service only, whereas some of the companies you tell they're very serious. It's a big part of their culture, and I think it's safe to say that Innergex, it's part of their culture. Okay. Now, right off the top, it's in renewable energy. So right off the top, we're talking about good for the environment. So that's pretty obvious. And then it's a pretty good job on their website about the social and governance side. And go have a look on their website. I'm not going to go through it here, but like I said, I have a pretty good BS meter, and I think it's real in this case, and that legitimately it's part of their culture. Okay, now I do want to talk about what they do in terms of their business units, and I have a few slides from their presentation that I want to go over. And the first one is this one right here, and in the upper left corner there, right in here, this is the one I want to focus on. So what businesses are they in? The blue, it's hard to read here because it's got a blue background, but the blue is the hydro, okay, and that's 49% of their business in 2017. This is a little bit dated, this slide, but that's what their most recent one was. And then a year later, only 38% of their business was hydro. Now, that's not because hydro went down, it's because the other ones got bigger. Okay, and the next biggest one is the green, which is wind, and then the gold is solar, and then actually got into geothermal, and I think that's in Iceland. You've seen many times the hot springs and stuff. So they're actually using that energy in the ground, that volcanic energy, to use it in our utilities, and that makes total perfect sense. Very sustainable. Okay, so and by the way, let's talk a little bit more about this. Hydro has been around for a long time, and it's very sustainable and it's very reliable. The next most reliable would be kind of a wind, and the cheapest. So they're in the two renewable areas that I would want them to be in, and then they have small amount of solar and geothermal. So I think that's the right mix, right? I do think solar can grow, and I think it'll be cheaper and cheaper over time, but right now solar panels are expensive and it's not so easy, so I think that'll take some time, but these other two are already pretty good at hydro especially. Okay, that was one slide I want to go over. There's one more. It's a couple more slides down here. This is right off their presentation, and it's the capital structure. Okay, now don't tune out just yet. It'd be a little boring, capital structure. It at first brush, it looks like they have a lot of debt, and they do. This is their. You can see equity at market value. 25% of their corporate structure is equity, and the rest is debt. Okay, that's a lot. It's pretty high. Utilities are typically higher to begin with because they're reliable cash flows and they can easily afford the interest. So therefore, it's actually a cheaper form of financing than equity. So yes, we want them to lever up, but you don't want to go too crazy. What I do like about this one though, couple of things. First of all, their little note here: 88% of outstanding debt is fixed or hedged. So fixed meaning they know what their payment is. It's not changing as interest rates change, or if it is, it's hedged anyway. But more importantly to me, and I'm finding this more and more with utilities, is this project level debt. So project level debt is not just issuing bonds for the company in general. It's specific to whatever they're building. Okay, and then you can literally lay out, well, here's what we expect in fees generated. So you can do it, and then it's individually financed. Okay, that's a big deal, because maybe one project goes sour, and maybe that debt goes sour, and you don't want that, but it doesn't ruin the company, right? Whereas if you get called on all of your outstanding corporate debt because of a couple of bad projects, that can ruin the company. So this is just more, let's just call it more efficient. Okay. All right, now let's quickly jump into our model. And okay, it's utility. So if you're familiar with my work, I like high return on invested capital companies. And this is a low one, but this is a utility, and this is all you get. You get 4, 5s, and 6s. That's about it, especially with North American ones. Okay, like you can get some higher ones in Brazil and Russia, but there's so much more risk with those that I don't even touch them. All right, so 4% return, and in fact, they've been growing their business, it's very encouraging when you're still getting that return. There's not much of a lag. I'd say there's probably a little bit of a lag. But you can see they're growing their business. Their capital went from $2 billion in 2011 to $7 billion in 2019. Okay, that's a lot. That's a lot. That's big growth, especially for utility. Okay, valuation wise, we feel pretty good. Worth about $26, trading at about 18. Dividend yield 3.86. That's very reasonable. Looks sustainable as well. And then lastly, the stock chart. And again, we don't do technical analysis, but we're certainly smart enough to look at a chart and just kind of figure out what's happening. First of all, it's low volatility. That's good. You see it's had a long period of just kind of sideways, and recently has kind of started moving up and to the right and starting to realize value, or the market is starting to recognize value, I think maybe is a better way to say it. So we think there's a long ways to go. I think it's in the right space. We always talk about check marks. A lot of check marks in this one. We say there's never a guarantee, but a lot of check marks. Innergex, there you go. Thanks for watching our investment video. If you want to improve your portfolio returns, simply subscribe. Or if you're an investment advisor or a retail investor and you want help with your portfolio more directly, we can help you with a managed account and manage each and every trade for you.